UK claim account change webinar. Now, I just want to get a quick hands in the air or just a quick sign there. Or if you can sign there in the chat section, just let me know you can hear me, and I'll kick things off. I'm just using the standard webcam mic, so that should work pretty fine, I think. All right, and there's a few things going on here as well, so it's a good time to quickly run through things. I don't want to waste too much time. I have, we sort of allocated 15 minutes before the data. I mean, we've got plenty of time to go through lots of different aspects, but I just want to make sure that you've got time to ask questions about the analysis and what we're looking at, where the trend lines are, and those sorts of things. All right, okay, so everyone hear me okay? And then I'll just kick this thing off. All right, it's looking pretty good. All right. Yes. All right, Edward. Good one. Okay. Now let's have a look at this. We've got a few things sort of going around. Now I'm just having a look at the majors here. First of all, just to see what the correlations are up to. Now the Kiwi has just dropped off again. I'd say that's something geopolitical there, to do with the government. I haven't had a look. I've just turned the screens back on after having them off for a couple of hours. See, the dollar yen has popped higher as well. I think there was some mixed signals or news from North Korea yesterday or earlier today. I haven't chased it up, but I saw a news flash on my mobile. Euro, but more importantly, Euro is sort of, see how it's just drifting through the short-term trend line here. Now, this isn't a major trend line by any stretch, and it's just starting to trade sideways, and that's exactly what sterling is doing. So what is happening is we've got a situation where you'd be redrawing this trend line. I know it's sort of UK starter, but you're probably drawing this level here now to give us that new low at the start of the next day, and probably also on Euro. But you know, in actual fact, that trend line on Euro is so fickle. It's only got 2 touches. When it's like that, I'm more inclined to take it off, whereas sterling is a bit more convincing. There's no other levels down here besides, you know, we have got that other low here around 131, sort of 19 or 20. That's something to keep an eye on, but the real level down below, it comes in around 130.87. All right, and now we have got this sort of, as you can see, we've got this little bit of area here, just around 130. What was it again? Sorry, 131.65, or around that 65 level. You'd think there would be a few cheeky stop losses underneath that, right? So coming back into the economic data. So sorry, just to finish up on the majors, dollar CAD. Actually, dollar CAD, that NAFTA decision, which came out, I think Gareth alerted me to it this morning, was pretty big, right? It's good for the peso, good for the loonie, that North American free trade agreement, right? So that has seen dollar, or the Canadian dollar, bounce aggressively or drop in the sense of the dollar CAD. But it is sort of coming back up to 125.20. It's pretty volatile. I'd expect that to continue because it is a geopolitical event or issue that's driving that. Dollar yen, well, the dollar bounce, this is one of the actual key things that you want to do is, if you haven't been looking at the market all day, then come up to your news, have a quick look at the news and see if you can see what, if there's anything major going around. Okay, so dollar edges up as Fed tax reform news awaited. Now, when I read that, that's more like the news services are struggling for information, right? So I'm not too interested in that. What I did see, just flicking through some of the pages, if I just come over to the European page, Draghi, right? So Draghi has come out, but there's a few interesting things coming out here too. This is a bit of political or geopolitical rumbling still out of Europe. Okay, so there's a number of things. The Germans are still pretty cranky about the ECB or them being involved in the ECB asset purchase. Obviously, Spain, the Catalan want to be independent from Spain. That's going to be ongoing as well. Portugal Interior Minister resigns after fires. Well, that's not too big. He's not the man in charge, but still, and some other news. There seems to be a lot of unrest in Europe. Okay, Draghi's trying to get them out of a bit of economic woes, and it's just sort of compounding with various sort of geopolitical unrest. But up the top here, Draghi says, with monetary policy being accommodative, we now have a window of opportunity to take structural reforms. I'm surprised euro hasn't rallied on that, right? So what he's looking at is potentially like, let's get this thing reformed. Let's shape it, reshape it. And that's what they're sort of looking at next week with that meeting, October 26th, the ECB meeting. They're looking at them unwinding their, the whole QE. So this goes a little bit the way. I'm surprised euro isn't a little bit higher, to be honest. There's obviously something rumbling around with the US dollar to keep it moving to the top side, but I just don't seem to see what it is. Also, some news out there: China central bank function of the yuan as reserve currency will gradually emerge. Yeah, sure. They're dreaming. They are dreaming. They are so far away from that. Right, now so what we've got here is a situation. The majors, well, euro and sterling are sort of working together. If anything, sideways. The dollar is up a little bit, but not against sterling and euro, which is a little bit weird. So let's just come into the European sort of page here. I'll actually come over more into this sterling setup. Now, I'll just drag T-Rex up there so I can see where cable is. Now, just having a look at the data, right? So we've got three major bits of data. Okay, we've got the climate count change. Now, this is the unemployment change. So they have actually just changed the name of this, which is good. It used to just be the climate count change. Now they've called it the climate count unemployment change. A negative number here, unlike all the other countries in the world, a negative number is good. The other countries it's an employment number, right? So a negative number in that regard is not good. The UK is the only country that does it the opposite way around. So just be aware, if it comes out really positive, okay, so they're expecting 1,000, that came out plus 30,000, that's a very big negative. It means an extra 30,000 people have been queuing up to get benefits. The unemployment rate has been pretty steady, right? So 4.2 to 4.5%. That's one thing that is pretty steady. And if anything, it's the least important. It's more the change. And then since the last, I'd say 12 months, the average weekly earnings, because there was no inflation, there was no change in a lot of the data, what the Bank of England and actually the Fed started picking this up as well after the Bank of England was they were focusing on people's earning capacity. Inflation. Were wages keeping up with inflation? Or, I mean, there's hardly any inflation, but just to see if people had more money to spend or not. If they had more money, well, then that's going to be good for growth, et cetera, et cetera. So that average weekly earnings is very important. Now, we do have retail sales figures tomorrow, but that's a bit of a way off. Now, looking at the currency, okay, let me just blow this up. Now, I've had a chat to Edward today about a few different things and a few other people as well. Just looking at where the currency is. Now, this is the trend line we had yesterday. So you've got one touch at the bottom, two. It's coming up to the third touch. Now, this isn't a really great trend line by any stretch, but it's the only one around, and you can see how well it's behaved, right? And if you're not sure about how trend lines work, well, this is a very good example, and you'll see this every day. Right, so it's broken down, it's come back, retest the trend line, and then starts to sort of work its way out. Now, it had a little bit of a dip lower. No one really wanted to go on with it. It's mid-range down here, and it already moved a substantial way. And let me just have a look here how far it had moved. So it's 135 points. Now, on a normal given 24 hours, that would move 150 points. Now, that's reset today. So this data has a chance to basically go down another 150 or even go up. Now, what I'm going to do is, because the European guys would have just got in, they would have seen this low in the Asian session, they'd redraw their trend line, and we're now left with a support level here at 131.65, right? Now, through 131.65, the next support level down the bottom here is at 130.88, down the bottom there. So that's something to keep an eye on. So it's 100 points away. So really, if it comes out weak, this 131.65 level is our main entry level. The low was down at around 55. So, if it comes out weak, I would, and I'm talking about so we're looking for a positive number on the unemployment change. Whoops, let me just move that. A positive number on unemployment change. So plus, 10,000 would be good. That means, more people are queuing up. If the rate was slightly weaker, and if average weekly earnings were, say, 2%, 3 negatives, then you'd be very comfortable selling through 65. Now, on the other scope of it, don't forget, so sterling has sort of dropped 150 points. And it was on, it's questionable whether the Bank of England was dovish to neutral yesterday. I mean, they made some comments about inflation, but I think the market may have been desperate for a move, and they got it. Now, so that sets us up. Because it's come so far, I mean, if you look at the top side, 132.80, it can move 100 points to the top side, 100 points to the downside. This can pretty much go anywhere. But what we need decent sort of variance to get the ball moving. And what we're talking about is, so you look at the range here for the unemployment change, minus 5,000 to plus 5,000, okay? The rate 4.2 to 4.5, and the spread here for the average weekly earnings is pretty tight, 2 to 2.2%. Now, a good number. Now, what good numbers would I be happy to buy with? Well, I tell you what, a negative number is good. As I said, a negative number means less people queuing up at the dole office, or the employment benefits office. The rate, I'd say the rate's probably going to come in steady, but if that improves to 4.2%, and even if average weekly earnings came out at 2.1% or 2.2%, then we've got the recipe for a good trade to the top side. Now, just remember, with the top side, there's one thing that's different. We are fighting the general sentiment of sterling. So what you need is, you probably need a stronger number much more stronger than a weaker number to get it moving to the downside. The downside is where the momentum is. Okay, now, at the start of this week, I was reading a number of articles. They were talking about, the Bank of England potentially coming out aggressive next week with their meeting, because all the data this week is going to be strong. Now, that's already been different. If this comes out weak, the unemployment rate, or the claim account change, the rate and the earnings, well, then that sort of puts a bit of a kibosh on that downside move. Now, there's a couple of ways we can trade this. Now, I like, to be honest, I mean, down through 65, right? So have a look where the currency is. It's at 82. So we're not quite 20 points away. I can tell you what, I was going to say 9 times out of 10. 7 times out of 10, at least, if there's decent variance here, the numbers are weak, we should get a chance to sell, okay, before it goes through 60. I mean, that's almost 25 points away, right? So I'm happy to trade live on this. Of course, I will miss it. If the number comes out extremely strong, then, as in like the claim account change is a really high number, like a high positive number, or sorry, a really weak number, then we may miss that opportunity. But you know what? It's been a little bit all over the shop. I'm happy to trade this live. No pending orders. But this is one situation where I would say you could place pending orders under the trend line. The situation is if you put it 12 points under the trend line, right, you're going to be getting into the currency around 53. That's 30 odd points away. It's too far from where the currency is. So if you're looking to put a pending order in, put it sort of closer to 60, all right, which is not outside the barroom brawl, but it gets you into the trade through the trend line, because by the time it moves 30 points, it'll probably retrace, right? And they're your two sort of trading options. And this is one thing you go through each time, is looking where the currency is, how far away is it from the trend line. If this was a normal pair and there was only one variable, I would already have a pending stop entry on the downside, and I would trade the top side live. Okay, that's the difference. The fact is, we do have 3 variables. We could have a negative claim account change, a positive rate, and a positive earnings, and it will just chop about. So we need to sort of see what the result is for each of these to get going. Now, the good thing about T-Rex is you can drag it across your screen, so I can have it close to the numbers, so I can hit it as the numbers come out. So I'm just having a look here at the numbers. I'm just going to get this thing really close. So we've got about 8 seconds. So just take it easy. 65 is the key level on the downside. There's a chance for it to bounce. I'm happy to let it go. Here it goes. Okay. Well, slightly better, actually. So the average earnings, oh, shit. If anything, you could probably buy some in around 80 again. So that whipped down to 85. So 1.7. So this is exactly what I was talking about. So this is the negative number. 1.7 is negative. The 2.2% is positive, and you've got the unemployment rate as is. So basically, I would think the average earnings would dominate, but we've got a negative, neutral, positive. Okay, so what that means is it's just going to chop about. ideally, and this is where you've got to get a little bit hard-headed with yourself. And I was about to impulsively buy some at 85 there because I thought, well, that 2.2% average earnings is a really, well, it's better, right? And it's a good thing. But the momentum is down. We've got a negative claimant count change number, and then we've got the positive. So what's going to happen with sterling? This is where you make a decision. If the three numbers, or at least, so say for instance, the unemployment rate has come out as expected, we can just push that aside. If the other two numbers were both weak or both positive, then you've got to trade on. But the fact is, one's negative, one's positive. They cross each other out. So basically, you're left with the currency where it is. Okay, and that's why we're not seeing it bounce at the moment. And this is what traders do. They actually assess the situation and think, well, okay, one's positive, one's neutral, the other's negative. Well, there's not much to do. What may happen here, you may see a little, and don't get overly excited, you may see a little flush out down just under 80 where it was before the number. And that'll be people who are long now going, you know what, this doesn't look right. I'm going to chop these positions out because we've got this mixed up number. All right, so if anything, the revision there for last month was a little bit stronger for the average weekly earnings. That's an extra little bit of positive. Minus 0.2 instead of 2.8. That's a negative on the top on the claimant count change as well. So basically, they're taken out as well. So this is a real situation where a good example of three variables sort of working against each other. And what happens is you just get the currency chopping about all over the place. I mean, you'd hate to have this is one of those decisions when you do have three variables, look at the trade execution, because if you had a pending order on the top side, you may have well been set up here at 10 on that first little bit of a gap, and then it's back at 80 or 85, 90 straight away, and you're kicked out of the trade before it gets going. The best thing about trading live or making decisions around that, and this is where that trend line sort of 25 points below the market is almost ideal because it takes out this price action. If the numbers were weak, it would go down, it would hit the trend line, we'd probably have a slight bounce, and then it would go through. And now that's an easy trade. And that's what I was talking about in the next best trade, was making sure that, you get the easy setup. If you don't get the easy setup, then don't trade. Okay, it's pretty simple. So, and this puts us back, and this is like a lot of trading opportunities with the economic numbers. This takes us back to, let's move T-Rex. You need to look forward to the next opportunity, because this one here is pretty much sort of come and gone. Now, we're pretty light on with data here today. So we've got, the building permits. That's not a huge number, but the housing starts numbers, can give it a bit of a kick, especially when there's no other US numbers around and the market is gagging for something to trade. Now, the stuff out of the US has all been geopolitical. We're talking about Trump tax reforms. We're talking about NAFTA. We're talking about North Korea, and all those sorts of things. So the market likes to trade economic numbers because they are clear, they're transparent, and everyone knows what to do. So if you are about later on, have a look at the housing numbers, because that could be, it sits there like all by itself, but it could be a really good trade because there's nothing much else coming out. Now, I did mention in the market insight, the manufacturing sales here out of Canada. Now, just be aware, there's a lot of wild activity here going on in the funds. Right, so you see this sort of slight stop loss run here on the downside in dollar CAD today. This is the market sort of coughing up some dollars. So dollar CAD had broken up on the daily trend lines up through 125.60. It was going, up to 126.50 or higher, as far as I could tell. Now, oil around $52. Isn't doing wonders. That'll put a bit of upward pressure on CAD, downward pressure on dollar CAD. But the NAFTA deal was very big, because if Canada and Mexico get shut out of that, it's really bad for Canada. So the fact that those discussions were extended is a very big positive, and that's where we saw dollar CAD's dropped, almost 100 points on that. So that's pretty big news, and it's become sort of a bigger news story through the day. Now, why am I sort of mentioning that? Well, we do have those Canadian manufacturing sales. It's some days that number can be quite huge. I would think on a day where we've got a major geopolitical issue sort of throwing it up and down all over the place, I wouldn't be sort of trading or looking to get involved in that number too aggressively, because there's too many variables at the moment in there. Okay, so, and that's just unfortunate. This is one thing that you will become accustomed to. Geopolitical events are a nightmare, right? They screw up all the trading opportunities. Usually it's only on one currency at a time. At the moment, we've got about 5 simmering in Europe, Brexit, North Korea, stuff in US. There's always weird things coming out of China. So, and then we've got these central banks next week. So there's a lot of weird things happening. So what we're looking for is the easiest trade. So once again, when we're looking for the easiest trade, okay, if you're looking at sterling, yeah, we had an opportunity just here a second ago. We've got a negative number at the top, as expected, positive. What happened with the currency? And there you can see, actually, remember I was just saying there before, we may see it dip down under 80. Now that was just, I'd say, experience watching price action, because my initial impulse was to buy it on that average weekly earnings, because that's a pretty solid number. But then, you know what? The revisions weren't great. We've got a negative, and the market's gone long here on those numbers, and it's now flushing them out. Do I think it goes down under 131.65? Under 131.60? Well, not really. There's nothing to really drive it. So what we're really looking for is the US numbers. If the US numbers come out really strong, well, then it's got another chance. But for the moment, I would expect this price action here, to continue, just to sort of maybe drift through the trend line, up and down, up and down. Once it's like that, you really don't want to get too caught up in that. And if you are thinking that you're getting that trend line's talking to you, well, then just delete it. Okay, the real trend lines you want to be focusing on from here are down here at 130.88 and up here at 132.80. All right, there are your trend lines. Don't mess about. I can't see sterling going up too far at the moment. So if anything, I would be looking to sell on a rally back up here towards 132.60 if you're desperate for a trade. Now, I think Dean was asking me today, okay, should I get into a range trade here? Well, yeah, you can. That's what I'm probably talking about here with sterling. But when we're looking for trades, don't forget, some weeks, at some points in time, these majors just don't give us anything, right? And there's no clear sentiment. See how a lot of them are trading choppy sideways? In a week's time or so, we may get absolute clarity with direction from the central banks. That's when the best trading opportunities will be, right? So don't get sort of caught up in sort of performance anxiety, not trading. The good trades will come. Just relax, let them happen. All right. We've got trend lines. I know some of them are broken, but some of them are quite random on random geopolitical events. Like the Kiwi would be a geopolitical issue there. Dollar yen is caught up in the North Korean issue. The market keeps getting short and squeezed out there. Dollar CAD, NAFTA, sterling, we've got Brexit. Then euro, we're talking, it's probably more central bank stuff, more about the ECB, but we have got the Catalan area in Spain going a little bit crazy. The Germans are always kicking up a bit of a stink about supporting the ECB, or the European Union. So there's a lot of weird things happening. So just relax. This trade didn't work out, and it's not really because of us. It's just because the market the penny didn't drop. The numbers didn't work for us. All right. Any questions there, guys? This is a really good, I say, situation to really try and explain a few things to you. The more of these you experience, especially where the currency is in relation to the trend lines before releases, the overall impact of the economic number, if there's one number, 2 or 3 variables, what to do and how to trade them. This is where you're going to learn a lot more about bringing all the components of the course together. And this is one major reason why you need to go through the course, because when I'm starting to talk about various things, and I am talking quickly and I'm changing from chart to chart to chart to various events and economic numbers, you need to know all the little components, because that will give you understanding about what I'm talking about. All right, any questions before I finish up there, guys? If anything, that's what I would call an unfortunate fizzer, and that's just one of those things. You can't control the outcome, unfortunately. All right, no questions? All right, guys, well, that's it. I'll call it a day. We'll get this up on the site. You can have another look at this later on if you like, and we'll move forward to the next trading opportunity. I'll be sort of focusing on a lot of the central bank events over the next coming weeks. Try and give you a bit more heads up, but also focusing on some of the key events as well. Give you a bit more understanding about how to get into those trades. All right, cheers everyone. We'll catch you later on. Cheerio.